This is our supply chain consultant presentation. We are from McKinsey & Company, and we will be presenting on Dollar General. We hope that you enjoy and will please hold questions for the end. I would like to take a couple seconds to introduce ourselves. My name is Megan Dickinson, and my other teammates that will be speaking are Tanner Smith and Gabe Clark. We have been with McKinsey & Company for approximately 4 years, and we are dedicated to empowering our clients worldwide. Our expertise lies in revolutionizing supply chain operations, guiding numerous organizations towards innovative, highly efficient, and sustainable business practices that unlock greater profitability and long-term success.
Dollar General, a large discount retailer, seeks to optimize its supply chain to support aggressive growth, improve efficiency, and address evolving market demands. Our McKinsey consulting team was hired to conduct an internal analysis to identify the most significant areas of opportunity and offer a roadmap for future engagement. To date, we have reviewed Dollar General's corporate strategy and performance in Week 1, conducted a value chain analysis and explored future supply chain priorities in Week 2, built and evaluated corporate and supply chain dashboards in Week 3, and completed store-level immersion to observe real-world operations in Week 4. This process allowed us to identify major gaps and opportunities, map our recommendations to Dollar General's business objectives, and develop a strategic consulting proposal for consideration by internal leadership.
Dollar General's background. So Dollar General is one of the largest U.S. retailers by store count with over 20,000 locations. It's one of the most successful retailers with 31 consecutive years of revenue and same-store sales growth. It was founded in 1939 and operates in 47 states and Mexico. And they have a small box format with roughly 7,500 square foot per store with approximately 10,000 to 12,000 products in inventory. The 2025 growth initiatives, they have store plans, so they plan to open 575 new stores, remodel 2,000 stores with an additional 2,200 in partial remodels, and relocate 45 stores. They also plan to open 1,000 pop-shelf stores. They plan to do some promotional increases to help provide relief to customer base and drive profitable sales growth. And they're investing in diverse teams throughout development, empowering, and inclusion. They're also planning to leverage digital tools and technology to enhance customer convenience. And they're going to be expanding their Dollar General Fresh initiative. Dollar General's performance. We reviewed everything from the end of Q3 2024. So revenue growth shows about a $10.2 billion in net sales, and that is an increase from 5% from $9.7 billion in Q3 of 2023. To compare Dollar General to Dollar Tree, Dollar General outperforms Dollar Tree, where Dollar Tree's net sales were around $7.36 billion. Profit margin for net profit margin in 2024 Q3 is 1.93%, and gross profit margin was 28.78%. Dollar Tree's net profit was around 3.09%, and gross profit margin was around 30.95%. The stock price for Dollar General was around $80, which was down nearly 40%. And Dollar Tree's stock was around $70, which was down 46%. This is our Dollar General dashboard review, going over the corporate metrics. We've already gone over revenue growth, net profit, and gross profit margins and average stock price, but we'll go over the net sales, which was around $10.1 billion. 1.95 million was in net income and 2.9 billion in gross profit and 7.2 billion in COGS. Dollar General's supply chain dashboard and findings. The average inventory value was approximately $7 million. Average transportation expenses was approximately $295.6 million. And average days inventory outstanding was approximately 91 days. Findings show that the average transportation expenses for Dollar General have steadily increased over the entire fiscal year. Average inventory value and average days inventory outstanding are also increasing, meaning items are staying on the shelves and not selling.
So I'm going to be touching on the value chain analysis. First, the in-source processes. It's the inbound logistics, that is with the private manufacturing label. So Dollar General has grown to the point where they can offer their own line of products under their own name brand, like Clover Valley and True Living and etc. Another in-source process is the operations that go on, and the marketing and sales part of Dollar General is also a huge part of their value chain analysis within the in-source processes. And outbound logistics, that is the private fleet. And then the outsourced processes, which is third party, which is usually out of house. It's inbound logistics, that is suppliers for national brands, and outbound logistics, which is trucking services to get deliveries in and out, and the technology development. I think Dollar General is working towards offering self-checkout systems and digital payment systems. And marketing and sales, which is essentially online orders and essentially services that focus on e-commerce fulfillment. Thank you. Yes, so when we made our observations, me, Tanner, and Megan, we obviously had some observations about what's working and what's not working. One of the other things is the understaffing. The understaffing, they essentially work at most two employees at once. One taking care of the freight overstocking or freight backlog, and the other taking care of the customers through the checkout line. The freight backlog, that's also an issue that's going on. There's usually different type of freights and stocks all over the store, employees stocking, and it sort of gets in the way, and it makes things a little harder to find and a little bit more unorganized. Leveraging self-checkout. Dollar General has not implemented a self-checkout yet. They're a little bit behind the curve on that front, and they need to process towards doing that. Delivery timing, it's on the slower side, and that causes a backlog of things, and some items be misplaced or not found. The store layout, it's a bit smaller. The aisles are small, and that poses an issue when some people are trying to find specific items and things of that nature. Customer experience. Essentially, they are working towards making experience easier and more convenient. It needs to be at this point, and satisfaction, I think, is on the lower side due to the unorganized atmosphere. Thank you. I'll be touching on the Dollar General's current supply chain agenda. Essentially, they want to enhance their supply chain resilience. Essentially, be more open. And they're focusing on being a bit more open towards specific trends and whatnot. They want to implement advanced planning and analytics, more so utilizing AI and for forecasting and planning. They want to integrate sustainability into operations, going more green to say, and being able to cut back on specific operations that might not yield the best after effects and whatnot. Then they want to engage in scenario planning. Scenario planning, essentially planning out for potential risk down the line, strategize ways to mitigate those risks. Then they want to adopt a customer-centric supply chain model. As I spoke a little bit before, they want to be able to essentially cater towards more customer convenient needs and whatnot. They want to foster ecosystem collaboration. They want to be able to collaborate with one another to essentially create a better environment and an easier to access consumer base. Then they want to invest in workplace development. They essentially want to build a repertoire with their employees and essentially enforce that. Thank you. I am going to go over the recommended DG supply chain agenda, essentially. I obviously said before, but invest a little bit more into workplace development, be able to build that repertoire with employees, so to motivate them. Freight management and cleanliness, as I stated previously, there have been issues with freight backlog being within the store and essentially those blocking out aisles and making things a bit more unorganized. They need to fix that. Optimize routes with AI. They need to be able to plan better, and they can utilize planning better with AI. They utilize AI to make their planning better. Utilize AI for predictive pricing. Essentially, those have that AI predict a price, whether it's going to go up or down, and that'll guarantee them, or at least be in the realm of positivity. Essentially, then they want to. I say we should enhance leadership. Leadership is a huge thing at Dollar General, and I feel like they kind of need to build it a tad bit more to be able to inspire and motivate. They're already managers there, and then they, as I said before, self checkout needs to become a thing. There's no self checkouts at Dollar General, and that's just impeding upon you know employees, and it'll help alleviate a lot of things. And yeah, thank you.
If Dollar General follows this recommended supply chain agenda and undergoes these changes thoroughly, we project cost savings to be anywhere between $560 million and $1.6 billion annually. This is largely due to a reduction in transportation inefficiencies, improved inventory turnover, and tech automation. Revenue would be expected to increase between $496 and $992 million from improved in-stock rates, customer satisfaction, and supply chain responsiveness. Dollar General's long-term return on investment would be high, with a payback period on most initiatives of 18 to 24 months. Here we see 7 of the most important supply chain agenda items for Dollar General and their estimated values. Beginning with workforce development, annual value will be anywhere from $80 to $160 million. Next is customer-centric models valued at $120 to $240 million. Strategic staffing valued at $100 to $200 million. Radio frequency identification self-checkout valued at $150 to $300 million. Freight and cleanliness valued at $90 to $180 million. Electric delivery fleets valued at $110 to $220 million. And finally, AI route optimization valued at $140 to $280 million. Next, we will touch on Dollar General's implementation approach. A phased rollout is suggested, beginning with pilot programs in select regions to test effectiveness before full-scale deployment. Implementation should be led by cross-functional and collaborative teams from supply chain, IT, HR, and operations. Next, it should gradually integrate AI tools, radio frequency identification checkout systems, and predictive analytics models. Then, successful adoption must be ensured through leadership and workforce development training. The final cost-value modeling for AI training and warehouse expansion is still in progress and will be refined in the next project phase. The estimated project timeline begins with finalizing the internal proposal by May of 2025, then initiating pilot programs between June and August, conducting a mid-implementation review in September, establishing a nationwide rollout at the end of 2025 and beginning of 2026, and lastly, going over final assessments and adjustments in the second quarter of 2026. For Dollar General, it is estimated that AI workforce training will cost $250,000. Predictive pricing and AI routing software will cost around $400,000. Self-checkout installation will total about $1.2 million. Opening a new warehouse will be anywhere between $7 and $10 million. Technology increases will be another $1.5 million, and leadership and culture development will be upwards of $300,000. This brings us to a total of $10.65 million on the low end and $13.65 million on the high end. Now, we still need to calculate an estimate of McKinsey's internal expense budget to add to Dollar General's.